A warning from the year 2030. The year is 2030. The air crackles with a familiar hum of anxiety, a low thrum that has been building for years. We've all felt it, but few truly understood what was happening until it was too late. I remember a time not so long ago when we talked about the national debt like it was some distant, abstract number. $36 trillion, they said. A figure so vast it was hard to grasp. We heard whispers then about something called financial repression, but most of us just shrugged it off, focused on our daily lives. The slow erosion, it started subtly. Interest rates, once a reliable measure of economic health, seemed stuck in neutral, then in reverse. Remember how your grandparents used to talk about earning 5% or 10% on their savings accounts? Those days became a quaint, almost mythical past. Suddenly, your money in the bank barely earned anything. For every $100 you had, you were lucky to get a few pennies back in interest, while the cost of everything else, groceries, gas, rent, crept steadily upwards. This wasn't an accident. This was the government's quiet hand at work. A policy designed to make it cheaper for them to pay off that colossal debt. By keeping interest rates artificially low, the interest payments on their $36 trillion bill became manageable. But here's the kicker. With inflation still simmering, that meant your hard-earned savings were actually losing value every single day. The purchasing power of your nest egg was slowly, almost imperceptibly, being siphoned away. The silent tax. It felt like a silent tax, one you couldn't see on your paycheck or your sales receipt. You weren't paying more directly, but your future was being nibbled at. Banks, once keen to attract your deposits with competitive rates, were now pushed by regulations to buy more and more government bonds, even if those bonds offered meager returns. This created a captive market for the government's debt, ensuring they could always find someone to lend them money, no matter how low the interest rate. The disappearing dream. I remember my friend Sarah, who had diligently saved for years for a down payment on a house. She watched in despair as the rising cost of homes outpaced her paltry savings growth. Her dream, once so clear, became a blurry mirage. Or my uncle, who had planned on a comfortable retirement, suddenly finding that his carefully accumulated pension was simply not stretching as far as he'd expected, thanks to the dwindling real value of his investments. This is the reality of financial repression. It's not a sudden, dramatic collapse. It's a slow, persistent erosion of wealth, especially for those who rely on traditional savings or fixed-income investments. It's a future where the government, desperate to manage its immense debt, subtly shifts the burden onto the shoulders of its citizens, particularly those who have been prudent and saved for their future. So as you go about your day, consider this warning from our present, which was once your future. The whispers of financial repression you hear now are not just economic theory. They could be the harbinger of a profound change, a shift where the cost of a nation's debt is quietly, almost imperceptibly, borne by the very people who have worked and saved their whole lives. Are we prepared for what that might truly mean for our futures?